Today is Friday, April 4th, 2025, and welcome everyone to the 14th edition of Finwell Daily Brief.
Glad to be here.
So let's dive right in. The market closed just a little while ago, 15.30 hours, and, well, it's looking pretty red out there across the board in India.
Yes, it really is. A sea of red, as you said. We've been looking at the news coming in from various platforms up to closing time.
And it's clear the sentiment was definitely negative today.
Quite negative. Not just a minor dip, but a significant downturn.
Yeah, let's put some numbers on that because it really tells a story. The Nifty 50, the main index, closed at 22,904.45. That's down 345.65 points, so about 1.49%, nearly 1.5%.
Right, but that's almost, less severe compared to the broader market, wouldn't you say?
Exactly. That's the really striking part. The mid-caps and small caps, they got hit much harder.
Yeah, the Nifty Midcap 150, it closed at 18,675.30. That's a fall of 563 points. Almost 3%, 2.93% to be precise.
Wow, nearly 3%. And the small caps?
Even more pronounced. The Nifty Small Cap 250 finished at 14,780.50. That's down over 500 points, 3.3%.
Okay, so 3.3% for small caps. That's a significant hit.
It really is. And even the Nifty Total Market Index, which captures everything, it was down 253 points, or 2.12%. So yeah, the pain was widespread.
So the obvious question then is, why? What spooked the market so broadly today? What's the catalyst here?
Well, the dominant theme seems to be these growing fears about a potential global recession. And what really lit the fuse today was news about new reciprocal tariffs from the U.S.
The tariff word again. That always seems to create jitters, doesn't it?
It really does. Concerns about global trade slowing down, potential trade wars, cast a long shadow. And India is certainly not immune to those global headwinds.
Right. And speaking of sectors feeling the heat directly, the pharma sector had a particularly rough day, didn't it?
Yeah.
Down significantly more than the main index.
Oh, absolutely. The Indian pharmaceutical stocks collectively dropped about 4.4%. That's a pretty sharp fall.
And was there a specific reason for that beyond the general gloom?
Yes, there was. Reports came out that U.S. President Donald Trump specifically mentioned potential severe tariffs targeting the pharma sector.
Oof. That's direct, given how important the U.S. market is for Indian pharma companies.
Exactly. You think about big names like Sun Pharma, Dr. Reddy's. A huge chunk of their revenue comes from the U.S. So the mere mention of severe tariffs specifically aimed at them is bound to cause concern.
Understandably. That directly impacts their potential earnings, their margins. Investors would naturally get nervous.
Precisely. It creates uncertainty, and the market hates uncertainty. So you saw quite a bit of selling pressure there.
Okay. Now, shifting gears a little, but still within the financial system, there was some news about Indian lenders possibly changing how they manage liquidity, something about a new tool.
Yes, that's right. There's a proposal floating around from some Indian lenders to shift towards using an overnight fixed-rate liquidity tool.
Okay, a fixed-rate tool.
And interestingly, they're also suggesting adopting something called the Secured Overnight Rupee Rate, or SRR, as the new benchmark for monetary policy.
Sir, right, explain that a bit. What's the idea behind adopting this and the fixed-rate tool?
Well, the main goal, as I understand it, is to make the daily management of liquidity, the cash flowing between banks, more efficient and maybe more stable.
Okay, so smoother plumbing for the financial system day to day.
Essentially, yes. Using SRR, which is based on actual overnight lending transactions and a fixed rate, could potentially provide more predictability compared to the current variable rate repo system. It's about enhancing how the system manages its cash needs every single day.
Interesting. Something to keep an eye on as it develops. Now, another piece of news, slightly outside the direct market action, but potentially relevant long-term, Prime Minister Modi's visit to Sri Lanka.
Yes, a 2-day state visit. These diplomatic engagements are always important for, the bigger picture.
And what were the key focus areas mentioned for this visit?
The main themes highlighted were strengthening ties in energy, defense, and investment between India and Sri Lanka.
Energy seems like a big one these days.
Definitely. There were specific mentions of discussions around India possibly exporting liquefied natural gas, LNG, to Sri Lanka.
Okay.
And also jointly developing a regional energy hub in Trincomalee.
Right, Trincomalee. That has strategic importance, so building those regional economic links.
Exactly. It's about fostering cooperation, which can lead to better trade, more investment down the road. Geopolitics and economics are always intertwined.
True. Okay, let's swing back to investment flows. Despite today's sell-off, there was actually some positive data on foreign investment recently, wasn't there?
Yes, and that's a really important counterpoint to today's mood. Data for March 2025 showed a significant increase in investments by foreign portfolio investors, FPIs, specifically into India's financial sector.
Significant.
We're talking 175.85 billion. That's about 2.06 billion US dollars.
Wow, over $2 billion just in March into financials.
And get this, it was the largest biweekly inflow into the financial sector in 15 months.
15 months. Okay, so that suggests, at least up until very recently, foreign investors were quite bullish on Indian financials.
It certainly points to underlying confidence, yeah. Even with global uncertainties brewing, there's clearly strong appetite for Indian financial stocks among foreign players just a few weeks ago. It's something to keep in mind amidst the current pessimism.
Definitely provides some perspective. Okay, let's maybe revisit some of those sectors and think about the implications. Pharma, we talked about the tariff threat. What should investors be thinking?
Well, as we said, the U.S. tariff threat is a major overhang. Companies heavily reliant on U.S. generics exports could face real margin pressure, maybe slower revenue growth if these tariffs materialize.
So what's the advice?
You really need to monitor the policy developments closely and look at the geographic diversification of the companies you hold. Are they overly reliant on the U.S., or do they have strong sales in Europe, emerging markets, India itself? Diversification matters.
Right, geographic diversification within the sector makes
Right.
sense. What about IT? They also have huge exposure to the U.S.?
Yes, and the IT sector was also down today. The concern there is less about tariffs directly and more about potential cuts in client spending in the U.S. if recession fears take hold.
So U.S. companies tightening their belts could mean less business for Indian IT firms.
Exactly, that's the worry. But again, diversification helps. IT companies with a broader client base, maybe across different industries or geographies, and those extending into new markets might be more resilient than those purely focused on, say, U.S. banking clients.
Okay. And the energy sector, down 3.3% you mentioned, driven by oil prices.
Primarily, yes. Falling crude oil prices hit stocks like Reliance Industries. It's a bit mixed, though. Lower oil can mean lower input costs for some companies.
True, like airlines or paint companies.
Right. But falling oil prices often reflect worries about weaker global demand, which isn't great news overall, so it kind of signals broader economic concerns.
Got it. Okay, briefly, what about bonds and the currency? Any major moves there?
The 10-year Indian government bond yield was actually relatively stable today. So no huge flight to safety within the domestic bond market, it seems.
Interesting.
But the Indian rupee did weaken slightly against the U.S. dollar. That's pretty typical when global risk aversion picks up. Investors tend to favor the dollar as a safe haven. So a slight depreciation, nothing dramatic, but it fits the narrative.
Okay, so pulling all this together, the market's down, global fears, sector-specific worries. What's the strategic advice for investors listening right now? How should they approach this?
I think the key word right now is caution and diversification. It's probably not the time for knee-jerk reactions or big speculative bets.
Okay, so caution and diversification, how does that translate into action?
Well, first, make sure your portfolio isn't overly concentrated in any one sector, especially those facing headwinds, like pharma potentially. Spread your investments. And maybe think about asset classes too. Equities, debt, maybe some gold.
Diversification across assets, not just stocks.
Yes. Second, focus on quality. Look for companies with strong balance sheets, low debt levels, and good, consistent cash flow generation. These quality companies tend to hold up better during downturns.
Right, the fundamentals become even more important.
Absolutely. Third, stay informed. Keep track of these international trade developments, geopolitical events. They're clearly impacting the market.
No doubt.
And finally, given that bond yields are relatively stable, maybe consider allocating some funds to high-quality debt instruments. They can offer some stability when equities are volatile.
Okay, so be cautious, diversify widely, focus on quality companies, stay informed, and consider some high-quality debt. Sound advice. Let's just quickly recap the main themes then.
Sure. So big market drop today across the board in India.
Yeah.
Key driver seems to be global recession fears, sparked by new U.S. tariff announcements.
Right, with the pharma sector taking a particularly hard hit on specific tariff concerns.
Exactly. We also touched on potential changes in liquidity management, PM Modi's Sri Lanka visit, focusing on energy and investment ties.
And that interesting point about strong foreign inflows into financials in March, providing some contrast.
Yes. And the overall advice for investors is really to stay cautious, diversified, focus on quality, and keep informed about global events.
Great summary. Now, for everyone listening, if you want more detailed analysis and want to stay up to date, please do subscribe to Finwell Daily Brief. And if you have questions or you just want to connect with other people interested in finance, you can find and reach out to SOS Finwell on LinkedIn.
Good place to connect.
And finally, if you found this brief helpful today, maybe share it with a friend or colleague who also wants to stay informed on the Indian financial markets.
Definitely. And perhaps a final thought to leave everyone with, especially on a day like today. It's a quote from Benjamin Graham. The individual investor should act consistently as an investor and not as a speculator.
Wise words. Something to definitely reflect on in volatile times. Thanks for tuning in, everyone.